You do not want to miss this podcast. It's our November update, and we got some bombshell stories to talk about. Hi, everyone. Welcome to Control and Compound. I'm Darren Mitchell, and joining me as always, Christina Wyatt. Christina, how you doing today?
Hi, Darren. I am doing great. I can't believe we're only a couple months out until 2026, but here we are into the second last month of the year. Where does the time go?
Oh, it's crazy. Yeah, November's upon us. And October, though, crazy stuff going on in October. So we got some cool news to talk about today.
Yeah, so last week on October 29th, the Bank of Canada did do another cut. So they cut the overnight rate by 25 basis points to 2.25%, with the bank prime rate now at 4.45%. So that's the second rate cut in a row following the months of them holding steady earlier in the year. Now, the bank is continuing its easing cycle, even with some stronger jobs data and a recent uptick in headline inflation we'll chat about in just a minute. But why the cut? Well, the bank's messaging made it pretty clear. They're seeing ongoing softness in the broader economy. So retail sales were estimated to be down 0.7% in September. Business sentiment remains a bit weak, and trade uncertainty obviously continues to weigh on our growth. So, in short, the bank is more worried about slowing demand right now than they are about inflation. So they kind of switched up their stance on it. Now they're moving toward the lower end of their neutral range, which basically means they'll still see some room. They still see some room to support the economy, but they don't want to go overboard with it. So that's why we've got that cut.
Wow. So what about inflation? What's that at in now?
Yeah, so digging into inflation, it did come in a bit hotter in September. So rising 2.4% year over year, which is up from 1.9% in August. Even excluding gasoline, prices were still up 2.6%, which shows that while inflation's close to the target zone, the underlying pressures haven't fully faded, right? Now, the Bank of Canada's preferred core measures, so like the CPI trim and CPI median, they're hovering still around 3.1, 3.2 in September. So embedded inflation is still there. And that's what we keep talking about. It's still sticky. And that's the big reason why, even after cutting rates just this past week, the bank isn't free rate cut mode just yet. They're keeping a careful eye on those sticky core numbers. If we look at the job front, which was another big piece of, what we've been looking at, the Canada added roughly 60,000 jobs in September, and the unemployment rate held at 7.1%. So we didn't see a big, recovery there. Now, full-time employment was the driver, while part-time work declined. So youth unemployment remains elevated at nearly 15%, still raising concerns there. And the labor market is showing durability, but it's not like rip roaring. So it's not doing great. So the slack still exists, and the combination between the inflation not just solved and the jobs okay, but not booming. That's kind of why we saw that rate cut last week. They're going to make their next announcement on December 10th. We don't know exactly what that will look like just yet, but economists have said that we were going to see these couple rates leading up to the end of the year. So we'll see what they come back with on December 10th.
Yeah, I was surprised to added 60,000 jobs. That's great, but that youth unemployment rate of 15%, that's just terrible. Like our young people are just getting hammered. Can't afford a house, can't get jobs. Like it's tough to be young these days in Canada.
Yeah, absolutely. So digging into the loonie, so the update on the loonie, where's that at? Well, not much change there. It's still sitting around 72 cents, similar to what we talked about last month. Now with the Bank of Canada rate cut, the dollar actually held steady that day. Now we are filming this a couple days before, so I don't know exactly what it is today, but it did hold steady right away, and that's because the bank hinted that this might be the last cut for a while, which gave it a little bit of support. We're also seeing the yield gap between Canada and the US narrowing as Canada bond yields creeped a little higher, which helps keep the currency from sliding further. And on the flip side, the trade and the growth concerns are still hanging over the outlook, right? So we're still seeing that. I know there was some ad concerns last month in the news with ads coming out of Ontario and whatnot. So it's still a slippery slope out there with uncertainty. So for now, the loonie's just coasting kind of in its range. It's stable, but it's not surging. And analysts expect it will stay in that 72 to 74 cent window until we see a bigger shift in rates or global sentiment with what's going on.
Wow. And then jumping to the stock markets, US had a good month, up 3.5%, up 18% year to date. Canada markets were up 1.5, 22% year to date. But the big news in the stock market was the corporate earnings pretty much have exceeded expectations, right? So they announce every quarter the earnings, and the earnings were really good for a lot of the bigger corporations that influence the stock market. So that was positive news. And then moving on to Bitcoin. Now, again, we're not recommending Bitcoin. We're not Bitcoin experts. Just purely fun. We like to talk about it. But holy cow, what a month for Bitcoin. So, as of today, Bitcoin's around 115,000, which is pretty much flat where it was a month ago. So it's like, that was, it's flat. No, not very exciting. But wow, we had the largest liquidation event in crypto history in the month of October. So on Tuesday, October 7th, Bitcoin is trading around 124,000. Things are booming. Everyone's bullish. Bitcoin's going to the moon. Life's great. On Friday, the 10th, 3 days later, he suffered the most catastrophic crash ever in crypto. It was dubbed crypto's Black Friday. So within a few hours, $19.1 billion of leverage positions were liquidated. So these are people betting on the price and borrowing money. So 1.6 million traders lost their total positions. And Bitcoin dropped 20,000 in one day. So that was massive. And the altcoins, like the non-Bitcoin, other cryptocurrencies, they got decimated just completely. They were way worse than Bitcoin. And basically, why? Well, it all came down to a social media post. So a social media post by U.S. President Donald Trump sparked this big thing. So what happened is the trade tensions between the U.S. and China were kind of getting pretty tense, and China said, "Okay, that's it. We're going to put these export controls on rare earth and minerals." And the world needs rare earth and minerals. You want to buy an iPhone, you want to build an F-35, you want to do just about anything technology wise. We need those rare earth minerals. So Trump responds saying, we're going to potentially have massive tariffs. So that was on the 10th. And then on the afternoon of the 10th, Chinese doubled down, said, no, we're doing this. And Trump came back and said, 100% tariff on China on top of the already large tariff we have. And confidence in the market just collapsed. So Bitcoin fell within 3,000 in minutes and then had that massive crash down to about 102,000. So it was 124 and it went down to as low as 102. The rest of the altcoins were way worse. They just get absolutely demolished. Now, the big kind of takeaway from this is it was the people that were in over leveraged positions. Bitcoin's very volatile, and they bet on the volatility. They bet it goes up, they bet it goes down, and they put these leveraged borrowed money positions. Those are the people that really, really suffered. The long term strength of Bitcoin, it's back again at 115,000 now. So it wasn't necessarily a Bitcoin disaster. It was more of a leverage Bitcoin disaster for those playing the leverage game. So, where the analysts think the future is, it's like, okay, Bitcoin still fundamentals. It's didn't drop that much overall, or dropped and then came back. But the rest of the altcoins, it's people will go to the safer place, and Bitcoin is seen as the much safer place versus all the other altcoins. So, long term, I don't think it's any major impact. But to put it in perspective, um, when when they dropped that $19 billion, the COVID crash, crypto dropped 1.2 billion. Remember FTX, the big Bitcoin scandal? The market dropped 1.6 billion. So a 20 billion drop is a big deal. Now, what happened when it dropped? The whales, BlackRock, they started buying at the lows. So the big guys aren't scared. They went in. BlackRock bought 21,000 Bitcoin during the crash. So they were taking advantage of this crash, expecting it to come back, which it did. So, you know, I think the future of Bitcoin for the short term anyway is going to be heavily influenced by geopolitics because we saw, literally trade tensions cause this massive liquidation. So again, takeaway, Bitcoin, it's not dead. Things are a lot of Bitcoin, long-term people are like, well, this is good. We flushed out some of the high risk people, and most of the long-term holders didn't sell, didn't panic, and everything's kind of back on track. But very exciting month for Bitcoin.
Yeah, very roller coaster of Bitcoin continues.
Speaking of roller coasters, what's going on in the real estate market? Now, I was talking to someone the other day, and they were telling me Sault Ste. Marie is just skyrocketing in prices, and people are bidding 100 grand over ask just so there's so when we talk about these different regions in Canada and we say Ontario, well, Ontario is a pretty big province, and we realize there's different pockets that are heavily are affected completely differently. So we usually talk about the big markets, but maybe in a future podcast we can talk about some of these hotspot smaller markets, because I was like, wow, I was shocked that there's places in Ontario still going that much over ask.
Yeah, you're right. It is definitely a mixed market out there across Canada. And I think I talked about it a bit in the last podcast where Saskatchewan was winning the race last month when it came to the markets and housing prices and whatnot. So every month it's a little bit different on where you're going to get that hit spot or that hot spot. But nationally, it is pretty flat nationally. Like if we look at it right across the board, the average home price still sits around 676,000 as of September, which has basically been unchanged since August, and it's down about 3.4% year over year. So nationally, kind of the same. Sales across the country fell 1.7% in September, but it still was one of the strongest Septembers they've seen since 2021. So it wasn't bad. It fell a bit, but it wasn't bad. Listings have crept higher about 7.5% from last year, giving buyers more options and keeping prices from moving too much in either direction. So that's kind of looking right across the country. It's about flat, right? Nothing huge going on. If we look at the different provinces in Ontario and BC, we still have affordability challenges that are still weighing on demand, kind of what you talked about there. And Toronto's benchmark price is still sitting around 971,000, down roughly 5.5% from a year ago. Now, as you said, things can change from place to place in Ontario, but that's just kind of looking at the big city. Vancouver's benchmark is about 1.14 million, down from around 3% last year. So they're still like, I feel like I've been saying that for a few months now. They haven't quite recovered yet. Now, the prairies continue to be a bright spot, like I mentioned. So Edmonton prices are up just over 4% year over year. Winnipeg is seeing gains of roughly 6% right now. Atlantic Canada is still remaining steady. We've got Halifax sitting at around 559,000, about 4% higher than last fall. So overall, the market isn't collapsing. I wouldn't say it's collapsing. I've seen those headlines where people say it has or it hasn't. To me, it seems a little flat, like it's been doing what it's been doing for a while out there. And there's definitely different pockets there's going to be opportunity in, right? Just like you said. One of the things I want to touch on today that was big in the headlines last month or over the fall is government housing programs. So most of the big programs we've heard of, like the apartment construction loan program, the affordable housing fund, they've been around for years and they continue to support, rental and affordable housing, but they haven't come close. Like we can all agree, they haven't come close to closing the supply gap just yet. They haven't solved the problem. So the new development this fall is the launch of Build Canada Homes, and it's a brand new federal agency, a brand new federal agency announcement in September 2025. So a program that they just rolled out in September, and I have been talking to people out there that have started using this. So it's being used, I think. But the mandate to accelerate construction by coordinating funding, fast tracking large scale projects, and using public land to buy more homes. So, unlike the earlier programs that they put out that just offered financing, the agency is designed to directly build or co develop projects. So, especially using like factory built and modular housing is what they're looking at. Now, Build Canada Homes has started with 6 sites. So, we've got Dartmouth, Ottawa, Toronto, Winnipeg, Edmonton, a few different places, and the $13 billion budget that they're looking at. So, early projects are expected to deliver around 4,000 homes with capacity for tens of thousands of more once fully scaled is what they're saying. So that's what that announced in the fall. This is what they're saying, that it could
I
do.
I wish them well, and I hope they build all kinds of homes. Sometimes don't have complete confidence when a government announces, they're going to do actual building and construction instead of although now they're involving the private sector, but still, I'm a big fan of the private sector. We've got a lot of home builders out there that could really do it a lot faster, I think, but,
But
we'll
they
see how it
are
goes.
Yeah, they are teaming up with the developers though. So I've seen it myself, and we've been looking myself into some grants. We're looking to do a build project in Nova Scotia. They've got some grants that are coming out specifically for developers. They're offering land at decent prices. Like I've talked to a few people in New Brunswick that are getting land for very good price and getting the financing. They have those MLI selects that people are using to be able to do large financing. So I do think that this is something that developers should look into a little bit, because I've been doing a little bit of research, and I am finding that the grants and whatnot available out there you might be able to get some projects off the ground and moving. I've heard Alberta's been using some of the programs already. I think it's definitely worth looking into at this point. Do I think it's going to solve our problems? Absolutely not altogether, and I'm gonna talk about that in just a minute. But I do think it's something that people and developers should be looking into just a bit. Now, housing starts did jump about 19% year over year in September, which was led mostly by multi unit rental construction. So that's good news, but Canada still needs to build roughly 3.5 million additional homes by 2030 just to restore affordability, according to CMHC. So obviously, I know this is not going to solve the problems. Another thing that I had found while I was kind of going through is the parliamentary budget officer says that the gap between home prices and household incomes has narrowed from about 80% to 34% today. So they're saying it's getting better. I think, I don't know. The average home remains out of reach for most Canadians though, right? Like I don't think the gap's fully closed there. They like to put out these stats and stuff. I didn't dig into them that
Yeah,
much.
narrowed. It's still impossible to buy, but it's a little less impossible to
A
buy
little less
for
impossible.
young people.
So yeah, the takeaway here, there's some new initiatives that I think people should check out if they're looking at building that Canada built homes. They're trying to centralize, speed up construction, get the supply going in the right direction. But the reality is, it's going to take years before that extra supply really shows up in prices or availability at the end of the day.
Okay, so jumping to economic news. Again, I was pleased with 60,000 new jobs last month. That be honest, I wasn't expecting that. So good. I want Canada to do well. Um, so last month we kind of talked about the parliamentary budget officer, who I love, by the way. And he talked about the economy and the deficit and the debt being serious and unsustainable. Government spending being serious and unsustainable. Well, we're literally days or hours, depending when you're listening to this, away from the November 4th budget. And all eyes are on the budget. And, what's the budget going to look like? What's the deficit going to be? Some estimates are putting the deficit up to $70 billion. Some of the banks are projecting $70 billion. That means we spent $70 billion more than we brought in. Forget about the debt. That was just the deficit. So to put that in perspective, Trudeau didn't balance the budget in his 9 years in office. After he was elected in 2015, he promised to balance the budget by 2019, and then ran 9 consecutive deficits. But his largest deficit was 61 billion in 2023, 2024, outside of COVID. So 61 billion was Trudeau's largest deficit, and now they're thinking it could be 70 billion or more when they announce it in on November 4th. So we'll see. But yeah, all eyes on that budget. What are they going to do to grow to the economy? What are they going to do to get spending under control? What about these big projects, nation building projects they're talking about? How we gonna speed those up? So I don't know, I'm hoping for good news, but we'll wait and see. Consumer confidence isn't great. Two-thirds of consumers right now in Canada expect us to fall into a recession. Okay, that's according to the Bank of Canada survey. So again, consumer confidence is not a great it's not a great thing when it's low, because if people think there's going to be a recession, then they stop spending money, and then there is a recession. It's like the old thing: how do you start a recession? You get two economists to say we think there's going to be a recession, and then people start tightening their belts and not spending money, and then it's a self fulfilling prophecy. So I did like some news from the Canadian government. Apparently, they haven't announced it, but they're considering rules for stable coins. So the U.S. had the big Genius Act last year, or sorry, last couple months, where they basically put legislation out so it's clear exactly this is how it works. Canada, no one really knows how a stable coin is treated now. There hasn't been a clear ruling. So if they did come out in the budget and brought in legislation to put regulations and clear good regulations, but clear regulations so people know what they're dealing with stable coins, I think it could be good news. What are we on next? Industry news. So what's going on in the insurance business? Well, business is good in the insurance world. So Canadian life insurance industry continued big growth in the third quarter of 2025. They were up 6.2% year to date. Activity in September was up 12.3% versus September of 2024. So again, in times of uncertainty, people seek certainty, and a lot, especially the cash value that we do, it's certainty, and people like certainty. People like all the other benefits of it. So more and more Canadians are putting money into life insurance, which I think is good news. But again, we'll wait and see because if the economy falters, typically insurance suffers as well, like all industries. But overall, good quarter for life insurance business and good quarter for CNC. Christina, we got some exciting stuff coming up.
Yes, super excited for our masterclass that's coming up on November 25th. So, we are doing the Canadian Rockefeller Masterclass. We are going to have the best selling author, Garrett Gunderson. He wrote What Would the Rockefellers Do? It's crazy that we've got him on here to come in and talk to us. We have got a Canadian wide known accountant, Jim McGowan. He specializes in trusts, in working with corporate business owners and looking at the tax strategy side of things. Canadian guys, so not US, Canadian based. It's going to be on there. And then Darren and myself are going to be talking about the high cash value life insurance and how that all intertwines with the Canadian Rockefeller method. This is live. It's not a recorded webinar that we are putting out after the fact. It is on November 25th. If you are there and you have questions, we are going to answer those questions at the end of the event as well. So it's certainly not something to be missed. Like looking across, I think this is the first ever done in Canada. Like there's never been a masterclass like this where we have Garrett Gunderson on, we have a tax specialist from Canada. Like it's going to be pretty great. I'm very excited for it, and spots are filling up quickly. Like it's crazy. I keep getting notices in on how many spots have been filled, and we do have limited spots at the webinar. So there is a link below. Make sure that you register if you want to be there because it's definitely not something you're going to want to miss.
Yeah, I am pumped. Like those two speakers outside of us, like Garrett Gunderson. I think he's had like 9 or 10 best-selling books. I've seen him present in person. He is a rock star. He is just one of the best presenters I've ever seen. And Jim McGowan would be the best presenting accountant I've ever seen. He's actually an accountant that is incredibly knowledgeable, but he's actually a really good presenter too. Where no offense to the accountants listening, sometimes accountants aren't the best presenters. Jim is just so clear and concise how he explains things, and yeah, I couldn't be more excited about this event. So pretty cool. Podcast wise, we had our first in a series of we're going to do this. Hopefully once a month, an entrepreneurial spotlight. So we're going to actually look at a business owner, interview the business owner about, how you grew your business, the challenges, the struggles. If you're a business owner out there, you're going to love this series because, you know, you hear some like crazy stories. It's like, oh, I'm not the only one that went through something like that. It was like, oh, the day I thought I lost everything. Oh, the day, and just great story. So the first one was David Fraser from Monkey Life. You may have heard of him from the Dragon's Den, the first guy that all 5 dragons wanted to invest with. We had another podcast on the Rockefeller Part 7. So if you're going to be at the Rockefeller Mastermind, I encourage you to go back and listen to those Rockefeller podcasts so you can be a little more knowledgeable and ask some great questions of our experts. We had a podcast on the hidden trap that's costing business owners millions of dollars. So this was really for the business owners, that cash inside a corporation, how it could be costing you millions. And then we had another one with all of our wealth coaches. So the wealth coaches got together in a round table, and we talked about the biggest surprises for each wealth coach when they started doing the role. What shocked them about what they learned. So yeah, I was stoked for those podcasts last month. We've had great feedback on that. Keep the feedback coming. If you guys want to hear something on an upcoming podcast, let us know. Send us a message because we love listener feedback.
Yeah, and we've got some great podcasts coming up this month as well. Following that entrepreneur series, we have Caleb Bowers from Bowers Home Construction. Very cool story. You're not going to want to miss that one. We are going to be doing a podcast on the budget. It's going to be the talk of the town in the next couple of weeks. So we are absolutely going to have a podcast on the budget, breaking it down, our thoughts around it. We're going to have another Rockefeller series. And then we have another podcast for the business owners out there, corporate cash traps. Stop letting CRA eat your profits. That is going to be one that you're not going to miss if you're a corporate. You're not going to want to miss if you're a corporate business owner. So we've got great lineup of podcasts coming out in November and the masterclass to boot in November. Like, it's going to be a great month. I'm very excited.
Very exciting. All right. That's it. Thanks for watching. Thanks for listening. Have a fantastic day.
Thanks for watching that episode. Don't forget to subscribe to our YouTube channel. Click that like button. Hit that bell button so you never miss an episode. And if you want to learn more about us, go to controlandcompound.com. We'll see you next time.
Thank you for tuning in to this episode. The information contained in this podcast is for informational and entertainment purposes only and is separate and apart from the wealth coach services provided by Darren Mitchell and Associates, Inc. to its qualified clients. Control and Compound Financial expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, or any other damages arising out of any individual's use of this podcast or the information in it. The views expressed here are those of each participant and guest and not necessarily those of or endorsed by Control and Compound Financial, its affiliates, subsidiaries, and their respective directors, shareholders, officers, or employees. For full disclosure, visit controlandcompound.com/podcast-media.